So I've already got the indicator up, it's already running. Ignore these numbers for now, they'll all become clear inside a second. So when researching online and looking at the rules of a pin bar, there's a lot of information out there on how to trade pin bars or the correct formation of a pin bar. And the one set of rules that came, close to my heart and I find the most relevant and probably the most useful are Walter Peters's rules. So for those who don't know Walter Peters, he's a primarily a discretionary trader. He's got his own YouTube channel, his own podcast, his own website. He's written a book called Naked Forex. For those who haven't read the book, I strongly recommend it's a good read. And he really kind of uses no indicators, so to speak, just uses price action, candlestick formations, and to really make his trading decisions, and he's been a quite successful trader. So when I read his book Naked Forex, he goes into his kind of favorite five six patterns, of which the next versions of this indicator I hope would include those patterns and refined around Waters' rules, because I kind of get them. They're easy, I kind of get them. So when I first looked at implementing his rules, I thought, as you can see, some of the rules, I'll go through them in a second. It's quite difficult to look, oh, is this a pin bar, is this not a pin bar? So I thought, why not create an indicator that just tells me, and hence the name One Glance. I can quickly see on the chart where the pin bars are and whether or not, based on other decisions, which we'll go through in a second, whether or not to take a trade. So before I go into the parameters and settings of the indicator, let me go through his rules and let me explain what's kind of been hardwired coded into the indicator and what flexibility you have in terms of changing around the settings. So looking at firstly the formation rules. So the first one is that the open and close are inside the previous candle. So again, I've got the indicator up now, and again, anything that has a number by it is classified as a legitimate pin bar based on the settings I have. So if we go through his rules one by one, then I can kind of show you what that means on a chart, so it kind of makes sense. So the open and close are inside the previous candle. So if we look at this candle over here, this one here, you can see that the open and the close are within the range of the previous candle. So that is the first rule that Walter has come up with to classify a pin bar. And as you can see, all these ones here, the open and the close, all are inside the previous range, or the range of the previous candle. And again, that is coded into the indicator. There's no flexibility within that. The next one is that the open and close are in the bottom third or the top third of the candle's range. So what this means here is that effectively the body, as you can see here, is within the lower, in this case, because it's a bearish signal pin bar, within the bottom third. Yeah, whereas this one is a bullish pin bar, it's in the upper third of it. So when I've looked at Waters' videos and doing it myself, I was there, looking at this is about 90 pips, and then a third is 30. Yeah, okay, there you go, it's within a third. It was getting quite cumbersome to actually do that, so again, that is coded in the indicator, so you don't need to work that out. So that's the top two. Again, no flexibility within those. The third one, which I think is quite interesting, and there is flexibility in here, it's called it's called room to the left. And what room to the left is talking about here is if you take this pin bar here, you can see how much room it has to the left. So if I keep narrowing this down, you can see that price has not been here for a while. It hasn't been there for a long time. So if I go back to it, what this number is saying is how many bars has price not reached that level. So, and you might be asking, how much of the wick are we talking about here? So we're only talking about the top or bottom 25% of the wick. Yeah. So what it's saying here is however long this wick is, we'll say it's, let's say call it 100. So 20 points here. So effectively from about there to there, in this range, which is roughly about 25% of the wick, is price last touched this range 827 bars ago. So we're looking at a daily chart. So we're looking at 827 days ago, effectively, that price has not touched that. So 3, 6, nearly 3 years until the Euro USD has reached this point over here. Now, if we look at this bar here, it's got 336 days. So obviously there's been a few bars since then. I don't know what the maths is on that. 9 bars since there. And if I take this, I would probably say about there to there is probably about 20 odd percent of the wick. So what it's saying here is price has gone even higher. So price has not reached this range for 836 days. So that's what Walter means by room to the left. And what he's talking about here is that there's got to be a lot of room to the left, regardless of the time frame you're looking at here. So if we look at this one here, this one's got 5. So you can see here that the lower bottom wick, 1, 2, 3, 4, 5, goes back 5 bars. So there isn't a lot of room to the left. Where here it's in what was effectively trying to say is where there's a lot of space. Price hasn't been in that range for a while, for a long time. Therefore, the likelihood of a reversal is more likely when it's there. And as you can see in this scenario here, price is then filtered off there, after that pin bar by 320 points. Yeah. So that's what the room to the left is, and that is configurable. So you can say that only show pin bars that have a minimum of 10 bars, 5 bars, or 0 if you just want to see everything, room to the left. So hopefully when we go through a few examples that were a bit more clearer. And this one here, candle range is greater than the previous 4 candles. So what it's saying here is that the pin bar, the range of the pin bar is greater than the previous 4. Now for illustration purposes here, I've set it to 0, so it doesn't take into account any ranges, because the more and more rules you put in, the more and more stringent you put in your rules, and therefore more and more chance that you won't get that many pin bars. Again, it depends on what time frame you're looking on. So here, for example, the range is about 85, 90 pips. You can clearly see that this candle's range is 150. So if I did set this parameters to 4, then this would not be showing as a classified pin bar. But for illustration purposes, I've set that number to 0 so we can see a lot of different examples there from that perspective. So those are the rules. Again, the first 2 are hardwired. These 2 you can add some flexibility and create your own rules around that. Yeah. So again, Walter doesn't talk about a number of bars or thing. He just talks about a lot of room to the left. So visually you can see that price hasn't been there for a while. That's enough indication. I've tried to put some rules around it to say number of bars. And this one 4, again, you can change that. You can make it higher or lower depending on your needs, on how many signals you want to produce. Now, these ones are not coded in the indicator. They're just his entry rules. I thought I'd just share them with you. So the candle, he talks about the candle where it actually prints on the chart is quite important. Is it on a support and resistance? Is it on, a Bollinger Band? Whatever it may be, it must be in a relevant location for it to make sense, for it to be either. The next candle must trade lower than the pin bar or kangaroo tail. So in this 2 examples here, you can see that the next bar traded lower, so therefore, would have triggered the trade. Walter likes in this will put a sell stop a few pips below, and if it gets triggered on that day, then yeah, if it doesn't get triggered, then he would then no longer trade that pin bar as part of his rules. Again, his rules, you can read into it how much you want. and then you'll put the stop on the high or the low, depending if you're buying or selling, but in this case the high of the pin bars, and they go to your risk to reward ratios that you're comfortable in. So in this scenario you'll get I think you might even get 1 to 3 by now, so that is 80 odd, so let's call it 90, 180, 270. Yeah, so you would have made a 3 to 1 on this particular example here if you decided to trade that one there. So those are those entry rules. Again, they're nothing to do with the coding of this indicator. This indicator is quickly to show you at a glance the rules of a pin bar. So what I'm going to do is show you inside the indicator so you can have a look at what you can do with it. So again, you can view it on whichever time frame you want. It works on all time frames. We've got alerts, so you can get an email, a notification through your smartphone, or a sound alert, or all three, or 2 or 3, or whichever one is your preference. A number of bars to draw back. Obviously, the more bars you draw back, the longer it will take to load up the indicator. But it's just set to a default to 1,000 bars on the time frame you're looking at. Quantity of previous candles to check. So this is the candle range greater than. So as you can see, I've set it to 0. If I set it to 4, you can see that they all disappear because the range of the candle is not greater than the bar. So if I did change it, for example, to 2, just to show you that you can change it around. Yeah, you can see that this one shows because it is greater. The range is obviously greater than this and obviously greater than this, but not greater than this. And this one does not show because this one is the next previous candle back. So that's that one there. I'll go through these in 1 second. What I wanted to show you was the room to the left. So what you can do here, you can select the percentage of the wick you want, of the high and the low, that you want it to use as the range, as I showed you, room to the left. So the preset is done at 25%. Again, that's just my view. You could increase that, decrease that, depending on your liking. And the minimum number of bars that it has to have touched before it classifies it here. So for example, if I put this then back to 0, so you can see here that this has 5 bars as a minimum. If I increase this to 6 bars, you'll see that that one disappears because the lower 24% hits it before the minimum number of bars, which in this case is 6. So hopefully that's quite self-explanatory. Again, 10. Again, it depends on what chart you're looking at. If you're doing day trading or you're trying to do longer term trading, obviously, in my view, in Walter's view, the bigger the number or the more room to the left, the better. But 10 bars is probably a good enough range, i.e., price in the daily concept. Price hasn't been there in a minimum of 10 days ago, so that's effectively what it's saying there. What you can also do, again, you can change the colors of the again, they're no longer up or down, so the numbers will be in red to signify this is a sell signal, and in green if it's a buy signal. So that's something there. You can change the colors if you wish. Now this here I don't really use, but you can use it. What this is effectively showing you is that if you want a predetermined size of a wick, so for example, let me just take one here that shows there. So this wick here is about 60 pips, let's say, for example. So let's just say you're only looking at wicks that are greater than 100 pips, for example. Sell action, sell candle, so this is a buy signal, lower wick. If I put that to 100 pips, for example, you'll see that that will disappear because the lower wick is not greater than 100 pips. Again, what I like to do is I like to set it up as a minimum to 0. I'd rather be able to see a lot more pin bars, and then using other technical tools like support and resistance, Bollinger Bands, whatever it is that you may be using, for a logical choice from there. So my preferred settings are the default. I think the default actually comes with 4, but I like to set this to 0. I like to set all these to 0, percentage of the week 25, and minimum number of bars 5. That is my preferred default setting. So, if we just go back and just have a look over here at some other ones here, that again 18, 6, again none of these would be of interest to me. Over here, one here's got 11, pretty big wick as well, so that's something to consider, and you can see a massive sell-off there. If I just zoom out a little bit so I can see some more examples, this is, in my view, that this is textbook. Yeah, I think this will also hit all objectives. I think if I put 4 back on here, 4, yeah, it does, yeah. So you can see here that this is classic textbook. So if we just go through the rules, open and close inside the previous candle, open and close in the bottom third. Yep. Decent room to the left. So price of the top 25% of this wick, price hasn't touched it for nearly a year. Yeah, a long time. And the candle range is greater than the previous 4. Well, it's probably more than that. It's more than a lot of the candles. Probably this one, 10, 20 candles. So that is a strong indication that that price is going down, and price hasn't gone down there since for a long time, well, as you can see. And if we look at the entry rules, the next candle must be on a support and resistance rule. Again, I've not checked support and resistance. I've just gone with room to the left is quite high. The candlestick must trade lower. So as you can see here, it's traded, next bar traded lower, and I've not even seen about 600 pips, and look, it just keeps going down from there. If you took one signal a year and that was it, and that was there. So again, you can do it on any time frame. So if we look, just put this back down to 0 so we just get more options. So we just did a current 5-minute chart currently today. Again, this might be big numbers, but you got to remember these are 5-minute bars. Again, you could argue that's on a nice support and resistance zone right there. 3,636 bars ago, next bar traded significantly lower, and boom, there you go. Here's another sell signal. Again, okay, bit worried about the height of it, if I'm honest, but you could argue that it's on some sort of zone to a certain extent there. And then 25 bars traded lower, and it's continued going lower. You would have made a 1 to 2, 2 to 1 on that quite comfortably. Here's an example of a pin bar there, but according to Peter's rules, the next bar did not trade above, therefore it wouldn't be valid, even though it does actually do what it's meant to be doing. Again, and this is where sometimes it doesn't always work. This one traded lower, but unfortunately it's probably higher than the previous 4 ranges, but it doesn't trade lower. This is quite a strong trend there, and it doesn't really do its reversal until there. So it's not 100% as if anything, so you've got to take other indicators and facts into account. And here's one here, nice classic one there, probably not bigger. There's probably some news of some sort. Oh, it's a bit late, maybe Asian news or interest rates or something, but okay, it's definitely not bigger than this range, but it's a long wick, in there. And maybe you could use stuff like wick size, again showing a lot of strong rejection. But yeah, this is the indicator. This is version 1, pin bar trading. Like I said, what I'm looking for some comments, looking for some feedback. I'm looking to make things better. I'm working on some other single formation candlestick patterns to go forward. So please give me your feedback, ways I can improve this, make it better, make it more easier to use. And I look forward to receiving your comments, and then hopefully make a more refined version indicator in version 2 rather. So thanks very much for watching, and I'll speak to you all soon.